Hello, everyone out there. This is Fred Myer, Scott Myer, Bob Lunsford, and we are
Myer Realty Commercial Corner.
I'm glad you said that, Scott, because you know I screw it up every week.
I know you do.
Can I say screw on the radio?
No, you can't say that, Fred.
I'm sorry. I'm sorry. I blew it there. Okay. Oh, yeah, look at that.
Look at that.
We're getting
Fred.
a call already.
All right. We haven't even started yet.
We haven't even started the show. We're getting a call.
Man.
That's nice. Well,
amazing.
We're going to put him on hold for a minute.
Okay, that's going to upset him.
Yeah. So, welcome to our show. We are here this week to chat about commercial real estate and a few different things regarding commercial real estate this week. We're going to touch on 1031s a little bit because we've just had a lot of that kind of activity going on. Even though we spoke about it a couple of weeks ago, it's really coming into our purview these days. And so we will touch on that. First, I wanted to give out some phone numbers. If you'd like to call in, we're at 844-790-8255. If you'd like to text in, 775-237-2266. Give us a call or text us. We'd love to be challenged by your questions, and we learn as you learn. So we'd appreciate anybody that would like to take part. So, let me pitch our what we have first. We have a pitch. We have the building we're in is a 64,000 square foot building. About 30,000 square feet of that is retail office, and then we have about 30,000 square feet upstairs that is straight office. And I've got quite a bit of that for lease. Probably we're about 65% leased up at this point, so we're getting there. We have some executive office for any of you folks, lawyers, attorneys, and anybody, secretarial type stuff, legal type work, small spaces, 150 feet up to about 400 feet. We also have a dental office in there that's almost 1,800 square feet that's available. And then some of our other office upstairs, and then retail downstairs from about 1,000 feet up to about 3,500 feet available in different configurations.
Who would they want to call if they want to?
They would want to call me, and that's 745-2918, Fred Myer at Myer Realty. And I'd be happy to show you around there. If you know anybody, or if you're interested, give us a call. And so moving right along, what do you have, Scott?
Well, we're going to talk about why commercial real estate values are now on the upswing, and they definitely are. We're noticing it in our office as far as the interest. And there's a lot of interest. There's a lot of people with cash, large amounts of cash money that they're looking for places to place that money, because I think they're probably scared of the stock market, and I don't blame them. I would be too.
Yeah. Matter of fact, we've had office chatter lately that is, well, for instance, today, just before we came over, we had a fellow rush over to our office to put together an LOI, which is a letter of intent, which is one of the ways you move in on a larger piece of commercial real estate.
Before an offer.
Yeah, before you write the offer, it basically it's non-binding typically, and it outlines what would be in the offer and sort of how the structure, sort of a general structure of the deal, and some deal points would be in there. Then you move from that point on to an offer. But he came in and rushed over because we told him we had to leave to do this radio show, and he said, well, I want to get this in quick. And he's here shopping with a large amount of cash out of a 1031 tax-deferred exchange, which I mentioned we're seeing a lot more of those. And he is going to offer on a little strip center that's available here in town. So, I mean, we're getting sign calls, and we're just seeing lots of activity in our office. So it's exciting. It's exciting to see people coming back alive and coming out of the woodwork to buy real estate, especially in our market specifically. I think people are really starting to get excited about what we have here now.
Yeah, so I'm going to throw this over to Bob like we usually like to do, and I throw questions at him and put him on the hot seat a little bit. So regarding the commercial real estate and what's been going on, let's do a little bit of history as far as, what got us here. What happened in the past with commercial real estate in the downturn regarding that, Bob?
Well, Reno, like most of the country went through a significant recession between 2008 and 2011, and commercial property values, along with every other real estate, suffered greatly. In some cases, commercial property values went down by 50% or more. And it's always about the income off those properties. So when properties are under duress, there's lower demand for rental space. There's fewer transactions. There's fewer development. There's a lot of things that impinge on that. But the bottom line is that the values decline in a tough market like that. But since that time, Reno and northern Nevada in general is following the rest of the country in many cases is strongly rebounded.
Right. I think part of what's helping that is the lending has eased up in commercial a lot. There's cheaper money out there. The underwriting guidelines have eased up a bit from what I'm reading and understanding. And, the values have appreciated right along with increasing rates of inflation. So, because of the lending, easing up on lending, that really helped, and then just everything else in the economy has really helped.
Well, in many cases, any underwriter and any loan lender is going to look at the numbers in commercial real estate, and it's always going to be about that. I mean, other than a straight off unimproved land parcel, but any commercial property that produces income, the underwriters are going to carefully scrutinize that. They're going to look at the expenses. They're going to look at the the income, the term of those leases, for example. They're going to look at other things. The building location. The
age of the building,
the steadiness of that cash flow, and a number of factors. But it's always going to translate back to what's called the net operating income, and the net operating income is the gross income minus the expenses to equal the net before debt service.
Right. So what is a typical? And this is a very general question. You can answer it regarding categories of real estate, but what's a typical right now? What are the typical cap rates?
Well, it kind of depends by property type. For
Right.
example, like virtually all over the country, cap rates for multifamily properties are low in this market. We've talked a little bit about that in the past.
As low as 4 for small.
As low as 4 for maybe some of the top properties, but typically they're in a range of 5.5% to 6.5%. And, they seem at this point to be moving down, which means that the value of the property is going up. So that rental demand, we just saw in this market, that Reno is one of the third highest appreciating rental rates in the country.
Right.
So there's a lot of demand in this market right now, and it's driving cap rates down and incomes up.
Right, and it's interesting. So multi-properties, it seems like to me, multi-properties have been doing well as far as the appreciation goes in their income because of that. But I guess we've kind of leveled off a little bit on the single-family stuff.
Well,
it's kind of slowed down.
Because that's a whole separate category.
Right.
And of course, banks don't look at the income produced off a single family. So, in terms of answering your question more completely, the industrial demand is up, and typically the cap rates are maybe 6% and up to 7% on that.
Let me jump in on that, Bob. Why don't
Yeah.
you tell them about that? Our office chatter today regarding that piece. We won't mention where it is, but we have something coming on market that is going to be a pretty interesting piece for someone potentially.
Well, we have a piece on the market. It's around 20,000 square feet. Well, let me back up. It's not yet on the market. It's around 20,000 square feet. And the pricing on that is very attractive. It's around 65, 67 a square foot for a 20,000 square foot building.
Industrial commercial.
Commercial zoning. And it's a high demand property in this market, and particularly because of its proximity, just very near the airport. So that sort of setting a cap rate on that is,
Well, it doesn't have one yet
Yeah,
because it's going to be vacant, we think. But it's a great opportunity for someone if you want to give us a call on that property.
Because, I'll just chime in on that, because those type of properties the vacancy rate is quite low on those type of properties.
Exactly.
Especially, this is very close in, too, very
Exactly.
close in.
I mean, for example, the flex space property where you have a little office in the front with a warehouse in the back, that's, under 5%.
Yeah, we'll talk a little more about that on the other side of this break. 745-2918. Give us a call. We'll be right back.
Thank you.
Hi, this is Eddie Flores. I want to tell you about the Wainema Ranch.
Hello. We are back.
Yes, we are.
And
Myer Realty's Commercial Corner.
thank you, Scott.
Fred, you never can remember the name, but
I
it's
know.
all right. I'm here to help.
My
I'm here to
name.
help.
I cannot remember my last name. Here. So if you'd like to call in, 844-790-8255. If you'd like to text in a question, 775-237-2266. Getting back to where we were, Bob, you were mentioning an opportunity, and we have lots of those that these days, it seems, in our little office, which we have so much fun in, and we have properties that nobody else has. That's why you have to call us 745.
Unlisted, they're called. Unlisted. These are.
Oh, is that what we
these are-
call them?
Yeah.
Oh,
yeah.
yeah, they aren't
We
properties.
have other slang for 'em, but
Somebody
that's-
has the properties, but yeah, they're unlisted. That's right. And so, if you've been out there and you've looked all over the marketplace, you can't find what you need to fill your 1031 and or just to fill your investment portfolio, give us a call. We turn over rocks. We find things that's sort of our forte.
That's right. We're also, I'll just throw this in, speaking of turning over rocks, we have groups that we meet with. Actually, it's every Thursday we have a meeting. One of them is at the RSAR, which is the main headquarters for the real estate, not the division, but the local real estate board here behind Meadowood Mall. So we do Reno Sierra Exchange, I think it's called. I can't remember the name. We never mention the name. We just go there and do deals, but it's something like that. And then at our office on the alternate Thursday, we have Money Matters / we call it Have Wants. It's Money Matters, Have Wants. So we talk about things that are going on, everything from the type of loans that are out there to deals that are happening to
New
projects that are coming in the market.
New businesses coming into town.
Matter of fact, we could talk about the one that's coming, just going to service the university too. Maybe we could talk about that.
Well, I don't know whether you in Radioland saw this, but the other day there was a significant development in student housing called Legends. And if you Google Legends student housing, you're going to see that this is a very large corporation who develops luxury student housing near universities throughout the country.
Tell us what that is, Bob, because I know your son stayed at one, right? Because you're a rich guy and you could afford to have your son stay at one over there in Arizona. And so why don't you tell us what that lifestyle is like, Bob?
Basically, these students are ones at which their parents are spare no expense, and these are nice rooms. They the Legends started at $750 to $1,250 per room. These have fitness rooms. They have little spas. They have little
Coffee shop.
swimming pools. All the workout rooms, et cetera, et
Do
cetera.
they have somebody that'll come and do your homework for you?
Well, I'm sure that goes on too. So, but it was a significant development in this market because this market has never seen that type of student housing before, and it really is a
Shift.
kind of a shift
Yeah.
in terms of this company is willing to present this or develop this $50 million building.
How many
Yeah.
units is that going to
I can't recall that.
be? $50 million.
That's a
$50
big deal.
million,
Yeah.
Well,
that's a
that's a
big
huge
deal.
investment in our, university, really, in a way.
In the
it's-
future.
Yeah. So they're looking forward to all those students. What they had to turn away 700 students from the dorm this last year. That after building a new dorm, in addition to all the other dorms they have there, I don't know how many they have.
So obviously, any student housing near the university is red hot, and we do have some listings around there, and we know of some other things going on. So I think that as an initial investment, if you're just getting your feet wet in this market, that is a strong place to look.
Yeah, it would be.
Speaking of which, we actually have a couple of small multis in office. They're not out there. If somebody's interested, give us a call, 745-2918. It is in the heart of Midtown. If anybody's interested in these, 3 on one APN and 4 units on another, give me a call, 745-2918.
That's his personal number. That's not the radio number, by the way. So that's basically the office number. You can call it 745-2918. Anyhow, so getting back to where we were, Bob, regarding where did we leave off on the commercial real estate cap rates?
Well, we talked about when an underwriter looks at a commercial property, looks at the numbers.
Right.
Right. That's the bottom line for them.
Right.
They scrutinize those leases, they scrutinize those numbers, they look at the physical part of the, the location of the property, et cetera, but the numbers really are the determinant.
Yeah, when you look at an appraisal on a commercial property, which Bob and I just saw, a very extensive appraisal on an office building, it is all about the numbers and the 3 different approaches that they use to value commercial property. And I wanted to touch on real quick, if I can skip onto 1031 for just a moment, because I wanted to reach back a couple weeks and just touch bases again on it, because we're seeing so much of it here in the marketplace. There's a way, if you have a property you've had for a while, you're thinking about maybe selling, don't know what you'll do, there's some ways. We have some ways to sort of extend and help you with the timelines around, the very strict timelines around 1031 tax deferred exchange. You have to identify your replacement property. You have 45 days to identify a total of 180 days to close your transaction from the day you close your sell side, we call it, which is the property you're relinquishing. So from that point, you have 45 days to identify 3. Typically, most people use the 3 property replacement rule. But there's ways to extend that. And one of the ways is to sell your property contingent. So you first put it on the market, you find a buyer, you go into contract, you negotiate everything out, and then you sit and you say, it's contingent on me finding a replacement property. Then you go out and continue to look for where you're going to go, where you're going to land in your replacement property. And you don't close until you find that. So it really gives you infinite amount of time, realistically, to find a replacement property and reduces risk. Another way is a reverse exchange, which is if you see something out there in the marketplace, say you've got some investment properties here, there, around town, and you see something you'd just love to have, and you can afford to buy it without selling. You go ahead and buy it, and you do what's called a reverse exchange. You want to make sure and set this up ahead of time, but you can buy your replacement property first and then sell your relinquished property after. So there's a way to accommodate folks who want to do it that way. And then the third way is you find your buy side first, which just basically, well, it's kind of like, that's the reverse exchange actually really model. Although you don't have to do a reverse exchange. If you can find your buy side first, you can write a contingent offer on selling your relinquished property. So once again, it helps you with those timelines and protects you basically. So anybody that's interested in doing one of those, we do them all the time. We enjoy them. It's a great way to move equity around tax-free. Once again, 745-2918. We can't say it enough. Right, guys?
Right, Fred. You say it so well.
I know it.
Okay.
I know it.
So anyway, Fred, I think that might have been about as clear as mud on that 1031. I'm not sure. People may have glazed over a little bit, but I think if you have any questions, because it does get a little it can get a little in the weeds a little bit, but you can call Fred at 745-2918, and he'll sound just like me, but he's not me, and he can help you out.
And you're not me, so stop it.
Back off. Anyway, so another thing something I'd like to read here just real quick, and we get back over to Bob. And this is cap rates equal interest rates, and it says amazingly some prime properties located in prime big cities like Los Angeles, Seattle, New York, Baltimore, Washington D.C., blah blah blah, all the big cities, and Boston now may sell at a cap rate price as low as 3 to 4% range for some multi-property apartment deals, which also parallels many of the fixed rate options for mortgages today, which I think is interesting. It's, the
Yeah,
cap rates.
those cap rates have declined so far,
Yeah.
which means the values are up, the cap rates are down.
And money's cheap.
And it's merged with, the range of mortgage interest rates out there.
Yeah, which is pretty interesting. But, and especially in the multifamily, which is what they're
They're
talking
not
about.
there yet in this market, by the way.
No, but I was mentioning big markets.
Right,
Yeah.
right.
But we're probably on our way. I don't know.
Well, it seems like it. It seems, we're heading, the cap rates are continuing to be driven down. So I had someone ask me about small multi the other day, and he crunched every single property out there available, up to 4 units, and he couldn't find anything that was a 5 cap or better.
Really?
Ooh.
Yeah, 5 cap. He couldn't find anything. So it's what he said anyway. So I don't know. The cap rates are definitely trending down. So
Just to reiterate too, for those of you that just turned us on, a cap rate is defined as the ratio between the net operating income, which is gross income minus expenses, divided by the value of the property, and that's the cap rate ratio. But if you're an investor out there and you want to buy on basis of a defined cap rate, then you can also use that ratio to determine what you should pay to achieve that
Right.
cap rate. So there is that relationship between NOI and cap rate and market value.
yeah, and we know it's a little complicated, and but give us a call, because we can certainly help with that, and
We can help uncomplicate.
That's right. We enjoy that. We enjoy showing people, teaching people if they want to learn about it. We're just doing it for you. So here we are, closing out another hour. 745-2918. Myers Realty.
Myer Realty's
Myer
commercial corner.
Realty's commercial
Fred.
corner. Goodbye.
All right, thank you.
Hey, Nick Can